Next, we have Maxwell from OENO Group. Maxwell is the managing partner of OENO Wine and Whiskey Investment. OENO specializes in fine wine investing by trailblazing a path through under-the-radar fine wine regions and revolutionizing the way collectors interact with this unique market. Maxwell is going to talk to us about wine and whiskey as alternative investments. Over to you, Maxwell.
Thank you. Awesome. Thank you for having me, guys. Let me just share my screen. Give me 1 second. So, yes, I am the head of Australia and also the managing partner for the OENO Wine and Whiskey Investment Fund. We are the world's most awarded wine and whiskey investment firm. And, you know, if you're hearing the world of wine and whiskey investment for the first time, it probably sounds a little bit intriguing and also a little bit confusing, but I promise you will have a full grasp as I finish this short presentation. Okay, cool. So just a little bit about the company. The company's been around for about 9 years. We've been executing the strategy for 9 years. We've got about $83 million under management from all of our clients. We have all of these awards, including a few more that were just released this year. And we have a 100-person infrastructure of a full-time team all around the world in 4 continents, speaking about 6 languages. So, you know, wine, whiskey are international assets. They are global assets that basically transcend all economies, all languages, all cultures. So let's get going. So what is wine and whiskey investment? So when we talk about wine and whiskey investment, we are talking about the top 1% of wine and whiskey production. What that means is that these assets are in what I refer to as the luxury economy. So if you were to look at the world's richest people last year, you would have noticed that Bernard Arnault, the CEO of LVMH, which manages Louis Vuitton, Christian Dior, you know, Tag Heuer, pretty much 80% of the world's most successful luxury brands. The CEO of that company, Bernard Arnault, became the world's richest person, and he leapfrogged Jeff Bezos and Elon Musk in the same year in a contracting economy. So you might be thinking, you know, that's pretty phenomenal. How did he do that? Well, he did that because when you operate in the luxury economy, when you operate in the top 1% and target basically the top 10% of income earners, you are more or less sheltered from the broader economy because these high net worth individuals that enjoy these assets, that are on the buying side of these assets, they are positioned very, very well to do well in good economies and also to do well in bad economies. So by investing in these assets, you basically leverage that stepping stone into being on the sell side, so being able to sell to the top 1% of income earners. Now, how does it work, right? It's really, really simple. Here's an example of the champagne brand known as Dom Perignon, which is owned by LVMH. And for example, the 2008 vintage was released to the market in 2018. It's always released after it's been aged for 10 years for 1,240 pounds for a case of 12. So roughly around 200 pounds per case, right? Then what happens is that collectors, investment enthusiasts, people like us, we take it off the market and then wait for consumption to happen. And consumption happens in champagne pretty quickly. So we take it off the market when very, very early, when people aren't really ready to drink it. Then it's drunk by consumers, bars, clubs, hotels, private collectors, restaurants, fine wine bars. And then what we do is we then sell it back into the market at a premium when supply is scarce and demand is high. So really, really simple. And if you think about it like this, imagine that there's only, say, 10,000 bottles released. For the price to double, really, really simply, what we're waiting for is for either demand to double or supply to half. That's just really, really simple math, you know? So if we want the price to double, we want either demand to double or supply to half. And the really, really cool, predictable thing about these assets is that it takes 10 years, 20 years to get them ready to sit on your table, ready to drink. And then it takes 10 seconds to open them. So it's very, very easy to sit there and wait for supply to drop because these assets are designed to be consumed. Then, for example, later on in the market, we then sold Dom Perignon back into the market at £2,940, which is essentially a growth of 137%. And all the while, whilst this stock is being taken off the market into new control and it's added to a private collector's or investor's portfolio, what happens is that it's held and it's stored perfectly in perfect conditions, it's insured, and it's independently valued. So it's almost like investing in property, taking an investment property off the market and selling it back into the market when the market is at its highest. Whiskey is the same. Whiskey is the same whether it's with casks or bottles. It's all the increase in supply is driven up by an increase in scarcity and also an increase of demand as a result of that. Cool. And here's, when we talk about wine whiskey investments, we're talking about hard assets. So we're not talking about investing in the companies. We're talking about investing in the bottles, right? In the bottles, in the barrels, in the casks, in the physical hard assets that can be independently valued and independently insured. So they're often compared to things like gold, colored diamonds, real estate, oil, commodities like corn. It's often compared to things like that. Now, I want to give you some examples. So in 2020, BlackRock, who is the largest investment manager in the world, bought up an extra $250 million worth of stock in Australia's largest wine company, the Treasury Wine Estates, which is actually based in the US, but they own Penfolds, right? And Penfolds is a very, very famous brand, probably the top 10 wine brands in the world in terms of luxury wine brands, in terms of branding power. So BlackRock Capital invested and essentially bought about just over 8% of Penfolds. And you've got to ask yourself why. Why would the world's largest, best, smartest investment manager that owns about 10 trillion worth of assets in every industry specifically pick a fine wine brand? And about 2 years later, we saw why. So the Financial Review released this article, Penfolds owners lifts the price of recession-proof wines, right? Of which, everyone last year was worried about things like inflation, putting their prices down, worried about affordability, worried about electricity costs, energy costs, water costs, all types of costs. And all the while, Penfolds increased the price of their portfolio of what they call recession-proof wines, which is essentially their wines in the luxury market all around the world. So in Australia, in New York, in Sydney, in Hong Kong, in China, everywhere, because they know that their audience will pay for it and they're happy to pay for it because these assets are, like I said at the beginning, luxury assets. So they don't sit in the normal economy. So by investing in wine and whiskey, you leverage that and you can benefit from that essentially. Here's another example. So last year, the fine wine market in 2022, you can see the squiggly lines there. I'll read it out to you. Represent the FTSE 100, which is the London Stock Exchange, represents gold, represents the Hang Seng, which is in Hong Kong, represents the S&P 500 in the States. I don't have the ASX on there because the ASX isn't really that big of a market compared to these, but you can see here at the very top, the two straight lines at the top are the Fine Wine 100, which is the top 100 fine wines for investment and drinking purposes, and also the Fine Wine 1000. So you can see here that fine wine as an asset and also whiskey as an asset is very, very stable. Now, past performance, of course, is not a indicative picture of future performance, but just to illustrate to you how much more stability and slow and steady these assets are. If you want to do sort of high risk investing, high return investing, fine wine or whiskey investing isn't for you. But if you want a, slow and steady, double digit, non-correlated to the market term deposit in many ways, fine wine and whiskey is definitely something that I would consider. And here's another example. So when you invest in the fine wine and whiskey market, our company has about 10 barriers to entry. So 10 reasons why the infrastructure we've built can benefit you instead of you going to doing it yourself at Dan Murphy's, for example. And you want to have all these 10 barriers of entry because this is what's available in the market. And if you want to be a really smart operator in how you invest in these wine and whiskeys, this is a really, really good starting point. So I want to address a few different types of risks because, as you know, there's no risk-free investment. In the fine wine and rare whiskey world, there's about $3 billion of fake wines, a lot of them coming out of Asia. And just to give you an example, the top 1% of the market that we invest in, is only about $5 billion. So that's 3 out of 5, you know. So if you go to places like Asia, especially in places like China, where they're very, very good at creating counterfeits, there's 3 out of 5 bottles are fake. You know, and if you think about it, it's a perfect crime because these bottles are so expensive, they're so revered. You know, every time you buy one, you don't want to drink it straight away. You want to hold it as a trophy in your house for 5 years before you drink it. By the time you do drink it, you probably had a few drinks. So you probably can't remember exactly what it tastes like or remember the last time that you tasted it. So it really is the perfect crime. And that's what we want to protect investors from. So we are one of the only wine and whiskey investment firms in the world to provide a perfect stock promise where we put every single wine bottle, as an example, through a 97-point proprietary scientific process to make sure it's authentic so that we can guarantee it to you, so that you know that you're not buying, for example, a fake share certificate. You want your share certificate in your investment in wine and whiskey, as an example, in your bottles, in your casks to be 100% real and authentic. Another way we mitigate risks is that all the stock, majority of the stock is held in London City Bond. So the London City Bond is a government regulated facility. It's the gold standard for holding wines and whiskies in the world. We hold it here because, for example, the King keeps some of his assets in this facility. It's about 150 years old. It's an age-old institution that's been supporting the wine whiskey trade for 150 years. And also because it's held here, we're able to have it independently valued and insured. So, you know, there's not many investments in the world you could have be independently valued and insured as they're appreciating for you. How do we exit? You know, exiting is a really, really big problem in the industry. You know, it's really, really good to have these assets, get your hands on them, to have something that appreciates and doubles in value. But if you aren't able to exit that to someone who wants to drink it, you won't achieve its highest value. You normally have to give a discount. Here's an example. So when you go sell to an auction house, remember that auction houses are essentially fire sales, right? If you have a wine whiskey collection in your home. Now, a fire sale usually demands about a 5-10% discount, as well as the auction house premium. Now, we want to return all of that back to the investors by selling direct to consumer as much as possible. And to share with you what that means, we have our own fine wine bar in London. We have our own rare whiskey bar in London. We sell e-commerce. We sell direct to consumer. We sell direct to our other collectors. And we also have an exchange that will be coming out later this year. And here's an example of some of the restaurants and hotels and European chains that we sell to as well. So here's a team. The founder of the business, my business partner, Michael Dell, is #1 wine investment advisor in the world. You know, he's been in Forbes, he's been in the Spears 500. You know, whether you invest in the fund or not, you'll be investing in the stock that he personally chooses, as well as his team that has 80 years of experience in the industry. And because I'm running out of time, I will wrap up here. Just another person I have to mention. So Justin Knock is an Aussie. He's in our team. He's been in the industry about 25 years. He used to work for the Penfolds Holding Company, and he's been judging the Decanter World Wine Awards since 2005. So I'll leave it here. There's my name. There's my brother's name. My brother lives in Brisbane. I live in Europe most of the time. Here's our details. We would love to get a hold of you. Probably the easiest place to get a hold of me is on LinkedIn. I'm addicted to LinkedIn. I'll get back to you pretty much same day, any day of the week, even Sundays. And I look forward to hearing from you.
Thank you, Maxwell.